Welcome to Willis Weighs In, where we discuss controversial and newsworthy tax planning topics. I'm Ben Willis, contributing editor with Tax Notes. Today we'll be going back to basics with tax planning. I'm happy to be joined by Jasper Smith, executive editor for commentary here at Tax Notes. He and I have been discussing tax planning for over a decade. Jasper, thank you so much for joining me today.
Well, thank you, Ben, for having me. And honestly, first of all, I appreciate you framing our conversations over the years as a discussion. What I would have probably defined them as is more you explaining concepts to me while I lob questions at you. So I'm happy to do that today, though, for the benefit, hopefully, of your audience. If we can go ahead and get started, I have a question for you right off the bat.
Absolutely. Please fire away.
We're talking about tax planning, and I think it's good for us to start with just an overview. So, at its most fundamental level, what is tax planning?
I view tax planning as the minimization of unnecessary costs and maximizing tax benefits. And so, since we're focusing on the fundamentals here, I think most universally people can understand tax planning right when they start a new job or change their W 4 when they determine how much withholding comes out of their paychecks. And so historically, we had allowances that we would claim, whether it was 0 or 3, and anywhere in between for children. And oftentimes people would take advantage of these numbers to determine how much money was withheld from their paychecks, either because they wanted to receive as much as possible immediately now, or they didn't mind providing the IRS with a interest-free loan. And so people right from the bat, from their very first jobs, engage in tax planning and planning when they fill out these forms. And looking to your job is a good place to start when it comes to tax planning and its fundamentals. Again, something that everybody can universally appreciate. So, and we'll get back to that later on as we continue out and we see how this gets tied into more complex themes. But when you're picking out your retirement plan at your job, when you're looking at potential 401k or 403b accounts, or you're considering a flexible health savings account or a 529 plan for your child's tuition, you're engaging in tax planning. You're thinking about tax deferral, the benefits, and these are all congressionally intended benefits to ensure both the health of the individual as well as the health of our economy, and to make sure that there's less economic burdens and costs, and our workforce is strong and healthy. And so there's benefits to everyone through this. And so I think when we take a look at really minimizing costs and maximizing benefits, you can start right off by looking at your job and what benefits are provided to you through that and through employment. And obviously we can expand this even a little bit further without getting into the complex details that are often associated with tax planning when people think about tax shelters and evasion. And one way to do that is simply through your bank account or home ownership. Is it jointly held? Will it be passed on through a survivorship right and avoid probate, so there's no state or federal income tax potentially? I mean, some of the most basic transactions that we engage in occur on a daily basis, whether folks are banking online or engaging in some sort of a tax deferral. And often the question comes to mind is who's informing you about this, and are they promoting tax benefits? And again, we'll get that into more detail later on when we discuss promoting tax shelters and how they can be distinguished from just basic advice from HR or a bank or a financial planner who's pointing you to annuities and life insurance that have tax deferral benefits that are congressionally authorized by Congress. But again, keeping it with at a basic fundamentals level, I figured I'd share that insight with you as far as how I view tax planning and minimizing costs and how it affects almost every person.
Yeah, no, and I definitely appreciate you framing that way because I think a lot of people, when they hear the concept tax planning, automatically their mind usually goes to these multi-million dollar or multi-billion dollar, even now trillion dollar corporations, and the type of niche tax planning concepts that they deal with sometimes. When really what you're just saying is everybody in society, from the person who receives the stimulus check to the person who buys their first home to anyone who has a job, all of us engage in tax planning every single day. So I think it's a really interesting way to look at it.
That's a great point you make about the stimulus check. We when we're talking about benefits, it's so often that we think about reducing liabilities on our tax burden. But what about those benefits? I mean, the IRS has a website that allows non-filers to go on and simply register to ensure that they receive their $1,200 check, which might be modified based on a number of factors. But those economic stimulus checks that stem from the coronavirus and the CARES Act legislation that followed, um, th- those benefits are being given to folks who aren't even filing tax returns and paying liabilities. And so and that isn't congressionally intended for a number of reasons. And so I think it's a good point that you expanded on my list of just these everyday benefits that we often take for granted, and we don't realize that we're actually engaging in some form of tax planning simply by going onto an IRS website and registering our names or filing a tax return so we can get these benefits.
Sure, something to think about, right? And you did a good job of giving us an overview there, talking about the basics. But I'll tell you, Ben, one thing that's always struck me when we're having these conversations or discussions over the years, you can break down tax planning or concepts into very simple terms that make it easy for someone to understand. But sometimes the way you frame them makes it seem like, oh, it's relatively simple. There's nothing to fear when it comes to tax planning. But I've been doing this for a while now, and I've been around long enough to know that can't possibly be true, right?
No, absolutely not. I've dealt with my fair share of fear when it comes to tax planning throughout my career. Um, I'll be honest, I'm actually a proponent of having a healthy fear when it comes to engaging in tax planning. And I know we've discussed some really fundamental transactions and basic tax planning that occurs, on an everyday basis for everybody across the globe. But we often do focus, indeed, as you point out, on the more sophisticated taxpayers who are paying much more in taxes and also paying a lot to have those taxes reduced through the advice of tax planners who are counseling them and pointing them to provisions that are very complex that aren't being emailed out by the IRS to make sure that you receive your stimulus check and promoted so widely. But that doesn't mean that these more complex benefits or hidden benefits, if you will, aren't necessarily intended. At the same time, we still have the concerns that give rise to the fears that you talk about. And for those of you out there who are dealing with these types of fears when it comes to tax planning, there's no need to worry about that or push that aside. Again, I think that there is it's helpful to have a healthy fear and an understanding that these are incredibly complex issues. And one of the best ways to deal with that fear is to make sure that you're surrounded by good folks who you can rely on to reach out and get support when you need it. And this applies to a mom and pop shop who are churning out tax returns or providing estate planning advice, to the most, well-known firms across the planet. Some of the largest firms need assistance, and in fact, there are government programs designed to work with some of the largest taxpayers out there in determining, the tax treatment of their transactions. And so that's actually oftentimes when I felt some of the biggest fears when you have so much on the line. But again, it can vary from any tax practitioner side, whether or not you're providing support for an audit position or a tax return or getting a PLR or entering into an agreement on cost sharing with the local government to determine what your responsibilities are.
Yeah. And one thing I know you always start with, and you started with today, right? You talk about the fundamentals. Why do you think those are so important, especially as it relates to this healthy fear that you're discussing?
So when we think about these complicated transactions and these tax benefits that are so difficult to understand, and the many provisions that govern them, um, the fundamentals guide us in making even the most complex determinations. And oftentimes are overlooked. It's very easy to get so lost in the weeds that we forget our practical insights about what the tax laws do, what they're designed to do and encourage or discourage. And so when we're looking at these complex rules, the traditional question of what is tax evasion and when are we, engaging in a transaction that is too aggressive, or often the rules are really focused on uh, the promotion of unintended benefits. And that's where things can certainly get gray. And there's a lot of procedural rules there. There's lists of dirty transactions, reportable transactions, all sorts of listed transactions out there, and procedural rules for how to address them and deal with compliance and whatnot. But fundamentally, the basics are often, where you can kind of step back and think about these complex things from a more practical standpoint. So for example, we talked about buying a house and titling property. Who told you how to title that property for tax benefit purposes? Did your realtor? Did you ask them? Were you doing it in conjunction with another tax benefit? Did you buy your house with a $8,000 first-time homebuyers tax credit, as many did after the Great Recession? When you're having these conversations that are motivating the markets as intended by Congress to come back from a recession like the crash in the housing market, you have to wonder: are you asking for advice generally? Are you requesting advice? And then uh, that kind of gets to the promotion question and how difficult that can often be to determine. Although sometimes we have to, again, step back and think about this through a practical lens, or else everything would be viewed as a promoted transaction. But also look to whether or not folks are promoting a congressionally intended benefit, like the tax credit I just described, or your 401k account, or your economic stimulus payment that Congress wanted folks to have to really help out in this difficult period that we're going through as it relates to coronavirus right now. And so that's just a little perspective as to how I see the importance of weaving together the extremely complex provisions that uh, you know tax practitioners are dealing with practical elements and insights that should also be kept in mind, because the practical points often matter greatly.
Yeah, no, and I definitely can appreciate that. And I appreciate the examples that you gave to really help us, again, gain that perspective. When I hear it, as I often do, my mind goes to sports analogies, right? So when I think about maybe like a baseball player that's struggling to hit, or a basketball player that's struggling with his shooting, a lot of times what they preach is go back to the fundamentals. When things seem to get a little more complicated, go back to the basics. So it sounds like you're saying from a tax planning perspective, that's kind of what it is. Start with the fundamentals, start with the practical, and then as it tends to get more complicated, you'll have that to ground you in whatever issues you're dealing with. So that's something I can appreciate.
I think that's exactly right. Whether or not you're focusing on driving a home run across the park, or putting a small bowl in a golf course hole, oftentimes your form is what matters most. And starting off with those fundamentals and basics and structure is key, even though it's so easy to get lost in the weeds as you advance more, just like professional athletes do.
Yeah, yeah. And you talked about this fear, this healthy fear, and I'm sure that there's a certain segment of your listening audience out there that's saying, "Oh wow, I'm glad to hear him say that." I do sometimes sit in my office, scared to write the next sentence because I'm not sure where I'm going. So certainly, somebody can appreciate your perspective in that, your experience saying it's okay to have some of that fear. In fact, it's a good thing to have some of that fear. But to make it a little more personal for you, Ben, were there times when you were afraid dealing with certain transaction? When were those?
Absolutely. I was afraid when dealing with transactions. And I think at some point, to your point, we've all been paralyzed by fear at one point or another. And that's why, I started off by focusing on a healthy fear and realizing that it's important to appreciate the concerns that your clients are going to be focused on and considering. But at the same time, we don't want it to prevent us from moving forward and progressing. And I know I've certainly dealt with that. And I'm sure many of our listeners can relate. And so, as far as the transactions and times in my career as a tax planner that I've thought about the difficulties and been afraid. Um, uh, I mean, I can remember transactions where I was working on billion-dollar plus distributions, whether it be of a note or a corporate subsidiary in a tax-free spinoff, and dealing with the IRS on a PLR, or looking through my authorities on an opinion and determining whether or not Falcoff and other fundamental cases out there relating to note distributions, and even the guidance right inside of Section 312, which focuses on E&P with respect to note distributions, um, certainly cause some trepidation, particularly when you're getting what might seem like a result that's too good to be true. If you're getting a return of basis on a corporate distribution or even a partnership distribution, which is very common, um, you know, you've got to really step back and think, wow, this transaction is tax free, and it's providing for uh, $1 billion plus in income that isn't being included at the time of the distribution, and it certainly makes you think. Now that said, I don't want folks to think that just uh, the numerics here and the quantitative amount should drive concerns. Again, I talked about mom and pop shops earlier and how everybody's focusing on different issues. What caused me to be afraid in that instance was impressing my client. And that can happen in any role when it comes to tax. I mean, it happens when I have conversations with you, Jasper. Although don't let that go to your head. But the truth is anytime that we're dealing with our colleagues or clients, which I view you as, and other folks that I work with in this organization, and even our listeners, um, we're trying to ensure that they're getting the most value out of the time spent that they're dealing with us, whether or not it's having a call with a client from a big firm, or talking to a different agency inside of the government that you're a part of to resolve an issue, or sharing advice between other folks in media and who are tax practitioners and economists and accountants, and folks who are all in our profession aiming to ensure that folks receive sound tax advice. And so I guess the point there is, um, you know, no matter where you are, you're just as likely to be subject to the apprehension that comes along with the immense complexity found in the code and the tax rules. And working your way through that fear and making sure that you have a strong network and people that you can rely on and count on and trust to make sure that you're protected and that your clients are protected, and making sure that you are advocating on behalf of your clients. And sometimes that means telling them the harsh reality and truth, which is that they're going to have to spend more time than they thought, or Jasper, you're going to have to put more resources into the investment that we're making to provide our clients who are listening into this. But some of these big decisions and determinations that folks are making out there, are hard to hear for some folks who are trying to minimize costs as much as humanly possible. And it really is our own responsibility as practitioners to convey to our clients what the risks and rewards are, and making sure that a proper analysis is complete, facts are being shared, collaboration is being done, reporting requirements are made, all the I's are dotted and T's are crossed to make sure that we're really putting our best foot forward. And so, again, that applies to practitioners across the board, small and large firms, any government agency or job you can almost name. As I started with at the beginning, tax is tied to almost everything, and so in some ways, everybody's a little bit of a tax planner.
Yeah, yeah, and I joked at the beginning about you explaining these concepts to me quite often. So I think it's a good point that you make, kind of referring to me as your client in terms of the examples you give of the one of the roles of a practitioner being to adequately inform your client, to make sure that they know the best options that are on the table. So I think that's a good example, in the way that you are explaining this concept to me right now. At the same time, you mentioned this earlier and then kind of touched on it again. Obviously, there are ethical concerns in every area of legal practice, right? Tax planning is not unique in that regard. The ultimate focus of any attorney is to give the best advice possible. However, a more cynical portion of our population might say that when it comes to tax planning or tax practitioners, the goal is always to save your clients the most money. So certainly there are times when having that goal, a practitioner might feel conflicted, right? And at those times, I want to ask you, what role would what we might call a moral compass play in those type of transactions or those type of situations?
You would by chance be suggesting that tax practitioners don't have a moral compass,
I would
are you?
never suggest such a thing, Mr. Willis.
No, but it's a great question because, in fact, when you look out there about ethics and professional rules and responsibilities, oftentimes morals are aligned. Even when we're looking at somebody's tax returns, who we think are too good to be true, they're not paying enough taxes. This must be immoral. Um, these issues, arise, and the truth of the matter is, tax is incredibly complex, and uh, the moral compass that I choose to follow is the law. And I think that's the same law that the government is required to follow, that courts aim to follow and properly interpret, and that we're all subject to. And as long as we're complying with the law and our own professional requirements and responsibilities, then I think we should all feel very confident about what we're doing. Because as I started off talking about, there are so many benefits that we receive almost on a daily basis that are designed to be given to us, to many people across the country, to reduce tax benefits, to give money when no taxes are due. And oftentimes these do, in fact, seem too good to be true. And this isn't to suggest that there isn't gray areas. I mean, the gray areas are where tax planners lie. They live in this area where they're constantly, determining, what is too good to be true, and how can you determine the congressional intent and what benefits are desired by Congress when it's not quite clear that they contemplated the intersection of two provisions. Maybe one in the corporate area that was originally designed with a purely domestic focus, and how that interacts with new international rules and the benefits that can apply there. And so, it certainly can be a difficult and challenging issue. But again, I go back to following the law and making sure that you're not in violation of that. But, you know, when you're doing that, when you're taking on responsibilities that are within your reach, that are not outside of your scope, then you should feel confident doing that. And and when you need help, make sure to reach out to folks and request it, and do your due diligence, and don't take on more than you can handle, because obviously tax is tricky and it's a complicated area and it can happen. But we all need to do our due diligence, and I think if we follow the law, we'll be doing that.
Yeah, and that's good to hear you say, because honestly, this is one place where I could say I have some experience too. I mean, honestly, just looking at my own career, it wouldn't exist if you didn't have a cadre of practitioners and government officials and professors that really just want to get the law right, because that's why they are providing valuable analysis, largely for free to a publication like Tax Notes and maybe some of our other competitors, because ultimately they're not trying to, skirt the gray areas. They're trying to say, hey, let's just make this clear. Let's just get this right. So as you said, we can follow the tax law. Let's just figure out what that tax law means and get a consensus there. So I can definitely appreciate that. Well, Ben, I know we'll be diving into these concepts and tax planning generally in more detail as these discussions continue. I think this was a great intro to the topic area, and I appreciate and look forward to you diving into it more in the future. So before we go, do you have any final thoughts on this topic of general tax planning, and maybe can give some insight into future topics you might be looking to cover?
Sure. Um, and I do appreciate hearing about your background. I know that you and I both started off in similar situations and advising clients and diving into some of the difficulties that we all face. And certainly in our current roles, we interact with these issues quite often. And so something I've appreciated more and more being here at Tax Notes. Um, as far as general advice, I'll circle right back to the beginning, which is what is tax planning? Getting back to basics, having an understanding and appreciation of the law, and realizing that taxes are required payments, compulsory payments, liabilities to our government. And when they are not required, when they are not compulsory, then they are not tax. They can be properly avoided and minimized. And even the word avoid can raise some eyebrows and concerns. But the truth of the matter is, the courts have realized that tax minimization and avoidance are perfectly sound concepts and indeed intended by the lawmakers. And so it's important to realize that tax planning is just making sure that our clients aren't paying taxes that they don't need to. And so that's just a general piece of advice. And um, throughout my career, I guess because I've often so vocal, and I do appreciate relationships and trust, and integrity. And so folks have frequently reached out to me on difficult issues, areas in the gray, so to speak. And they've continued to do that while I've been here at Tax Notes. And folks grappling with some of these difficult issues can always reach out to me still, and understand that they can be off the record and appreciate the confidence of our discussions. As far as future topics, I wow, I could go off. I've got so many topics, as you know, that I would love to discuss and write about and chat. But I think it does come back to basics and fundamentals, which is a theme that I'll continue to focus on throughout. But of course, weave that into some of the more complex tax planning areas. We often think of a basic formation, a 351, as so simple of a transaction, although it often gives rise to some of the most complex issues in tax planning and liquidating an entity and what the benefits will do there, and whether or not both are being done pursuant to a tax election that's being allowed solely for tax purposes, and whether or not those transactions can be combined, create a reorganization, which can create more complexity, and then determining whether or not you're engaging in a 351 that just happens to also be covered by Section 304, and that stock sale or deemed stock sale that gives rise to a dividend. How does that move E and P around, and how does that work within GILTI, and will that move earnings and profits from a high tax country to a low tax country, since the GILTI regime uses a per country approach? I mean, the planning opportunities just grow and grow as you build off the fundamentals and building blocks. And so again, we'll be starting with them and moving into the more complex areas of the law as we move forward. And I'm looking forward to having more of these discussions with you, Jasper.
Yeah, it sounds like you haven't given it much thought, Ben, about what you'll talk about in the future. So, hope you could pull that together. No, obviously there's a lot there, and I appreciate you having me on now and in the future to talk about these topics. So, thanks again.
Absolutely. For those of you watching and listening, Thanks for joining us here today, and don't hesitate to reach out with any questions or comments. I can be reached at Willis Weighs In on Twitter, or you can go ahead and email me at ben.willis@taxanalyst.org. Thank you so much.
Willis Weighs In.